Hey, Bulls and Bears, what is going on? Back with another dose of economic reality. Let's talk about the consumer losing so much money or depleting their savings so deeply that now we're seeing a big surge in people leaving Target or no longer shopping at Target or spending less at Target, choosing to now spend more at Walmart. So less at Target, more at Walmart. We know that Walmart is a little bit cheaper than Target. Let's take a look at what happened and get into some of the numbers. Target's profit fell 90% in the May through July period as the company cuts prices and cancels orders to get rid of items that were not selling. Remember, a lot of these companies, retailers, during the 2020 health crisis shutdowns, even 2021, they ordered as much goods as possible because they weren't sure, and there was a lot of uncertainty about the shipping lines, the shipping delays. People didn't know if it was going to be a year, several year, like a multi-year shutdown. People just didn't know. What retailers did, including Target, is they stocked up on goods as much as possible, afraid of running out of items. Continues, it warned in June that inventory had grown out of hand. Quote, the vast majority of the financial impact on these inventory actions is now behind us, said the Target CEO. So yes, they had to cut prices, and that's one of the reasons why profits dropped, but also consumers are getting closer to the financial edge and they're choosing cheaper options. We see a big surge in business at the 99-cent stores, the dollar stores, and now more people going to Walmart versus Target. This is what happens at the end of the line, or when you're nearing the end of the line, when people get so far into debt. And now with rising interest rates on top of it, this is a mess. What's going to happen when people can no longer afford Walmart, when the credit cards get even more maxed out? Well, it's going to be thrift stores and rummage sales and flea markets and swap meets. And maybe even trading and bartering with George and Joanne down the street. Because people are running out of money very quickly. Savings is being depleted. The cost of living is not coming down in a significant manner. And this equals big trouble for many U.S. consumers. Even before 2020, close to 70% of people were living paycheck to paycheck. And we saw all the financial assistance, moratoriums that were put out there to save people, to rescue people. Now those are over for the most part. And now the pain is really starting to set in. Now, this is not completely devastating news. It's not like the company lost 90% of its value, but their profits did fall 90% from the previous reporting period. And if we go out a little bit further on the Target stock, we see that we're still way down from the peaks there at about 250, 260 in 2021. And we're at about 175 and some change right now. But let's go out further, and we see this dangerous pattern that I warn about quite frequently. It's the parabolic, where the price almost goes straight up and down, and we saw the stock beginning to go up in 2018. So once you see that, you need to take some off the table. For those that held the stock all the way up to 250, 260 and didn't sell any, I feel really bad for these people. Will this stock ever revisit these all-time highs that we saw in 2021? Well, in my opinion, it's very unlikely. And again, look at this run up and compare it to even the dot-com bubble, 99 and 2000 is when it went bust. This makes that run up, or that stock market bubble, look like an ant compared to this mountain right here. All right, this is what happens when you have unleashed money creation and multi-trillion-dollar spending packages and debt issuance into the stratosphere. This is what happens. You have massive run-ups in asset prices. We're also seeing housing starting to come down, air coming out of the bubble. Now, where did all these shoppers go that were not spending money at Target? Well, they didn't just vanish into the atmosphere somewhere. A lot of them went to Walmart. Walmart sticks with second half outlook after earnings beat expectation. Now, Walmart's known by many investors as a recession-proof stock, and we see that the stock price is doing much better. It's down 6% over the past year, but faring much better than Target and some of the other retailers. And in fact, if you look over the past month, we're up about 8% just in 1 month. So that was a real nice dip buy for the investor that bought when stocks took a big drop, including Walmart. Now, something pretty interesting, we see that retail sales are weak and flat, and of course, down at Target, but still overall just considered flat. Even with the drop in gas prices over the past 30 to 45 days, people are not spending more. In fact, a big drop in gas prices like we saw, well, not very big, but significant to some, did not give people enough confidence to go and still spend more at these retailers. Many stopped spending at Target and went to Walmart, but overall, when you look at it as a the big picture of this, retail spending is flat. And this is being recognized throughout the economy and throughout the business world. Bank of America CEO, struggling Americans feel that they are in a recession. So regardless of what the authorities say, the quote unquote authorities, they're not actually declaring an official recession. People feel like they are in a recession, right? Folks, we're over a 40-year high in inflation, and the Fed, all they're talking about is slowing down the rate of inflation. They're not talking about causing deflation or lowering the cost of living. They're just talking about slowing the rate of increase. So for those that think everything's too expensive, it's just going to get worse. And it's not just me saying that, it's the Fed saying that. The Fed is saying that they need to get closer to their 2% inflation target. Does that mean prices are falling? No, it just means that they're going to drop down to a 2% annual increase if the Fed does exactly what they say they're going to do. Does it ever work out like they say? Usually not. It's usually an overcorrection, or it's just not enough. And a lot of people are looking at this and they're seeing these small rate hikes, even though they seem big with a 1 percentage point increase. They're still small in the grand scheme of things when you look at the cost of living. A recent article out of MarketWatch also acknowledges this. Savings are going to run out, already battered by high inflation. A rate hike will hit lower income and rural Americans. Why? Because it's going to make their credit card balances basically balloon. And we know how many people are not paying off their credit cards in full. The number is growing. These people are in big trouble. These small rate hikes are really going to hurt the people that rely on credit cards just to make it from week to week or from paycheck to paycheck. And their savings is running out at the same time. This is going to be bad news for a lot of people. I hope it's not any of you. I'd like to hear from you down in the comments on this. What do you think about the surge in people leaving Target, Target profit declining, and Walmart still going strong? People looks like they look like they're leaving Target and choosing Walmart instead. That's what I see. Please let me know what you think down in comments. Hope you guys like this update. Thanks for watching. Big love, everybody. Bye for now. Peace.